Hey, what is up, guys? So, I will be going over the trades I took last week. It was a pretty choppy week. We didn't have the greatest price action, so I ended up taking two wins only near the lunch hour of New York Stock Exchange because market open wasn't the greatest. Lately, with the whole summer, we have had choppy price action around market open, and then 1 or 2 hours into market open, we're actually getting good setups, just like twice a week or something. So this was actually my first trade of the week I took, which was on Tuesday, 13th August. It was a loss. I did not wait for this candle to form properly. As you can see, I just had my limits to sell here. Candle looked pretty strong to close, but then last second it pulled right back up and then just rallied up, completely going against us. I did go against my bias, so this was a counter trend trade, and the price was above EMA, but the way price was rejecting here, we had great rejection here. We had the market structure shift right here, and then here we were about to break another structure point right here with a strong bearish candle, but then last minute it pulled up and it closed right around the structure and then ended up reversing against us. And the whole day ended up being bullish. So this was my plan for this trade. It was to take it off of this AOI right here down to this AOI. I could have aimed for this AOI right here, but then the way price was moving, it wasn't that strong. We didn't have mass amount of volume in the market, so I was not aiming for a huge trade. So just this little structure point right here, plus AOI, would have been fine for me. Plus we had an imbalance here, but price just didn't go against us. It just didn't go with us, and yeah, I ended up cutting a loss here. It was 0.6% of a loss here. So this is how we started our week, with a loss. And then my second trade was on NAS as well. It was right here. It was this 1 to 5 hour multiple. I was going to close this out at 2 hour multiple, but price was moving very slow and dead. So we had market open right here on this candle. We had market open and it just started rallying up from market open. Soon as we had the market open, price was just moving up. It didn't have a huge retracement, but it just had these little pullbacks right here. It didn't have a huge retracement. I thought we would clear these lows first, maybe fill in this imbalance. We had news here, so we had this gap, but price just ended up being bullish. I had this AOI marked out and this, because my aim was buys, because the last trade that we lost, I was against my bias. Should have looked for buys there as well, but this time I was sticking strong to my bias and I was only looking for buys. So once price came into this AOI, my plan was I want to wait for a break above the AOI, and I wanted a clear break of price above the AOI, but this kind of came in, I rejected, came down, but I was still bullish. I still waited, still stuck with my plan, and then we slowly, took us a while, took us like roughly like half an hour just to break above. And then once this kind of formed here, what I was waiting for, I was waiting for a retest, and then right after we broke up in 10 minutes, price came right into the AOI for a retest. And then after we had this retest right here and we had this kind of form, I was like, okay, if we break this structure point right here, I was like, I'll take buys. I was super confident with this trade, first of all, and all we needed was this structure break right here, and then I would have entered. And that's what happened. We had this bullish engulfing right here, which broke the structure point, and as soon as it broke it, I did miss it by like 30 seconds, so I ended up entering right here. I didn't enter exactly on the break, but I did catch it in 5 minutes. So when this kind of was forming and it was around here, I entered buys with my stop loss under the lows plus the AOI, and we had the EMA on the way here as well to keep price higher. The EMA is just an added confluence, which is just telling me the direction of price and where price could keep continuing. And if the EMA is looking like this, it means that the price is going to keep continuing higher. not 100%, but just a little confluence on the side which you could use with your trades, just to give the trade a bit of confidence, a little bit more. So after we had the break of the structure level right here, and I entered on this candle, I put my stops below the AOI plus the low right here, and my initial TP was this AOI right here. It was 19,525. That was the exact TP I set when I entered this trade, 19,525. But the reason I closed was because of this price action. I actually closed on this candle right here, I think. After I started seeing these type of candles, I was like, I think it was this candle actually, but yeah, it was this candle right here. Because we had this bearish, I was like, time to close. When then this formed, it formed here, so I was like, yeah, it's time to close. I don't think price is going to do much. And this is what I ended up doing, just slow ass sideways price action. It was a shit price action. It was just consolidation for like an hour or so. So I would rather close instead of holding through consolidation, although it did end up hitting my TP, but that was way later on, and I wouldn't hold that long. So yeah, when I did enter this trade, we did experience like 10-15 minutes of drawdown, but that was just a test of the AOI. And like the reason I keep my stop loss below the AOI is because sometimes what price can do when you enter trade, it could come all the way down to the AOI right here. It could test it like this. Sometimes it can even dip under the AOI and then move in direction. So that's why make sure when you set your stop loss, don't just keep it under the low. If you've got the low, even if your low is like somewhere here, right? Let's say for example, you've entered the trade here, and your low is like here, right? Your low is right here. You would still set your TP under the AOI because that is the safest way to go about it. Because some of my trades I have experienced like this when my low was right in the middle of the AOI, but I still set my stop like 5 to 10 pips is a good amount under the AOI, because most of the time price will decide to sweep that low that's inside the AOI, plus maybe just dip under the AOI just to continue in your direction. So a good amount under your AOI, or if you're selling above your AOI, would be like 5 pips. That's roughly the good amount of pips to keep. And then price ended up rallying up, and I did mark out this fair value gap right here, which was holding price up. When we were here, price actually fell right down. I still had this fair value gap laid out, and I still saw price respecting the fair value gap, although it went under it, but it managed to close in it, pulling back up. So that fair value gap was another confluence because it was holding price up really good. And then we ended up having this little run, and then I ended up closing on this candle. I was like, yeah, I'm gonna secure it on 1 to 1.5 instead of potentially price reversing on me or just being stuck in consolidation, So this was my second trade of the day, of the week, I mean. After that loss that we started the week off, and this week I only really took 2 trades on NAS. It was that loss, and it was this win, and this win made up for it. And then my third and final trade was US 30 right here. One of my nicest pairs. It works beautiful with my strategy, and I just love US 30. So this trade right here was actually one of the most simplest trades. It was a simple textbook trade. So it was off an AOI, and this trade had a lot of confluences. It was like a perfect trade. So here's where we had market open, and off the market open, I don't like taking trades in the first half an hour of market open. It's the choppiest half an hour. Market's just opened, it'll be moving choppy, it'll be taking out buyers, it'll be taking out sellers, it'll be sweeping like both sides liquidity. It's not the safest. So I waited like half an hour to an hour, and then we were just getting this shitty price action. Now I was strongly bullish on this day as well for US 30. I was only looking for buys, not sales. No matter how good the setup was, I'm only taking buys. Even if market presented me opportunity to sell, I would ignore it. So here we see prices moving down. Once it was like here, I was like, maybe we might not get our setup, because I thought price might just fall. But then it slowly started coming up, and the price was kind of slow. You could see by the candles, but I did end up taking this trade because I just was a bit confident with it, because we had the EMA, we had this break right here. So first of all, we have the AOI right here, right? It's being respected. If price is under, it's selling. If it's above, it's buying, right? So I could have entered on the break of this structure, but right inside the AOI. If you're buying, you want to buy slightly just above the AOI, not really inside it or under it. This would have been kind of under it. So I waited for this high to be broken. Now as soon as this high broke and this kind of formed, I entered on the candle. We had the break above the EMA as well, so we broke above three things in this trade. First thing was price managed to pull back up above the AOI and break back above the AOI. We broke this structure and we broke above the EMA. Three things. And then the next two candles when I entered was just retesting the AOI plus the EMA. And the EMA was just so perfect. It was just on my AOI. It can't be a perfect trade than this, you know. So I took buys on this. It was a 2.22 R multiple. Pretty simple trade. Again, like about 10 minutes of drawdown, and then price just rallies towards my trade. My aim was this high to get taken right here. That was my initial TP, although I could have set the AOI right here, but I did just decide to. Price was moving slow. I didn't want to catch a long trade, you know. Even if I set this TP, yeah, I would have got hit in next candle, same candle actually. And if I set the 50%, I would have still had to wait like roughly half an hour. But 2.2 R multiple is actually a great R multiple. I took it. I risked 2% on this trade as well, so 4%. It's an easy 4%. So I took it, you know, at this high. This was I think this might have been a news high. So after this getting taken out, price could have potentially turned back around. I didn't really want to risk this trade. It was a beautiful setup. Didn't even take too long. TP got hit. I took it, you know. So yeah, this was this week. I am making a video a bit late, but I wasn't on YouTube much. But yeah, these was the trades for the last week. 3 trades only. You gotta minimize the amount of trades you take, because the more trades you take, the more losses you're risking. So yeah, these were the trades of last week. 1 loss, 2 winners. Winners make up for it with good risk management. So yeah, that's it. I'll get back to you guys with another breakdown of my next trades this week.